Hey everyone, and welcome back to the channel. In this video, Preston Pysh, along with Andy Edstrom and Jesse Meyers, explore what is the optimal allocation someone should have to Bitcoin in their investment portfolio. They also discuss the importance of your allocation to Bitcoin matching your education on the subject.
I will say that when it comes to actually investing, which is something all of us are in the business of, it does help you think about sizing your position. Perhaps not everyone is comfortable with having the majority of their net worth in Bitcoin, but at least it informs the the allocation that you're likely to make.
Yeah.
So what do you think about what are you thinking about allocations these days, Preston? And I don't mean for you personally, but when you have conversations with, let's say, professional investors or folks they may be individuals, they may just be high net worth or ultra high net worth individuals. What's the advice you give with respect to either allocating or learning about Bitcoin, or both?
I think the first question I'd have for them is, do you have a fiduciary duty? And if they respond yes, then my next question is then why are you ignoring the best performing thing that has performed for a decade straight? And then the next question is because they'll say, oh, it's high volatility in and then I would say, isn't there this thing on Wall Street that you control risk by having position size that's appropriate for the volatility in that underlying asset? To which they should say, yes, there is. And then you could say, well, how about this thing that over any 4-year period you pick has the highest Sharpe ratio of anything over the last decade? It's nonsensical today for a professional money manager or financial advisor to not take a client question about Bitcoin seriously. I would actually think that they're in neglect of their fiduciary duty at this point. My personal opinion. So then it becomes the position size. And so much of this comes down to what's the person's net worth, what's the person's goals and objectives, what's their tolerance for volatility inside of their portfolio, what's their expectation for, sustaining. I mean, I'm sorry, but if you're not at least trying to attain a 10% return annualized, you're not even keeping up with the M2 debasement of the currency that's being supplied into the system. So it needs to be that at least. But for all of these variables and all these reasons, you have to construct something that allows the person to actually stick with the position. Because if they don't stick with the position, they're not going to just be wrong on the entry. They're going to be wrong on the exit as well, which is like a double whammy. Because they're going to buy it emotionally and speculatively, and then they're going to sell it the same way and at the exact wrong timing on both fronts. So, and the only way the person can have that conviction in the position is through just straight up knowledge. You have to understand what you own, even if it's a small position size. So that would be my thoughts around how to think about the problem for a financial advisor or for somebody on Wall Street. Is you have to think about all those key things, and then another piece to this is the way that the person puts on the buy. So I was just talking with Rational Root this past week. I think it would be awesome, and I'm just too lazy to do the work to build this chart. And I know he's an expert, not just at doing these charts, but his way of graphically laying things out is far superior than what I could do myself. So that's why I kind of brought the idea up to him. But his wheel chart and how you have the 4 different seasons of Bitcoin. I think it's important for a person that's trying to do a spot buy, because one of the questions I hear from somebody, or the scenario that I see from people, is they hear a little bit about Bitcoin, they immediately like it, and they immediately want to buy some.
Yep. And
a lot of the times, this same person does not want to buy 2%. They're like, I want to buy 10% of my portfolio with this, literally tomorrow. Okay, so that's great.
Sounds like me when I first bought Bitcoin, by the way.
But the problem for this person that I found in this scenario is they've heard an hour to 10 hours worth of content. They're super excited, and their excitement for it far exceeds their intellectual knowledge to have a large position size, which means they may sell it and lose money. Okay. So what I think is important for that person is what I would describe as like a dollar cost average over a specified period of time for a quote unquote spot buy. So you got $100,000, you put it on a spot, you put on a DCA for 90 days, okay? And because you spread it out over 90 days, your chance of being scared out of the position, because you haven't matched your intellectual knowledge of what you own with your vigor for this new exciting thing that you found, that you discovered, helps you not get into this situation where you get scared away. I think that if you did an analysis of the 4 seasons, that DCA spot buy is going to fluctuate drastically. Like today, I would, if I'm guessing, right? I don't know what it is, but I think you could safely DCA into Bitcoin with $100,000 spread across 60 days. And you're probably never, if you never bought again, you're probably not going to really have any red in that principle. In early 2026, if you were going to buy, assuming we continue to go through cycles, you might have to DCA that spot buy for maybe a year to 9 months, depending on where you're at, to make sure that your principal is not getting wrecked and you're getting scared the hell out of the position.
Yeah, I love this. I love this framing. Sorry, go ahead.
One other thing. The irony of that statement is at the beginning of 26 is going to be probably the peak of somebody wanting to do a complete spot buy on the day, just because of the emotional, speculative nature of it. And that is the exact moment when they need the DCA probably the longest.
That's it. It's an adverse selection dynamic. It's when the price has peaked, has reached its cycle peak. That's when it's all over the media. That's when all the news is around. It may be, by the way, the time when some people are saying, "Oh, this is it. This is the Bitcoin. This is when Bitcoin just goes vertical and doesn't crash, and the cycles are over. It's the last cycle." And that is when your emotions are likely to be highest and you're likely to be most keen. It reminds me of the classic data, the classic research on investor behavior in mutual funds specifically, right? Which is whatever your average mutual fund makes, pick a number, 6% annualized, but your average mutual fund investor makes like half that. They make something like 3% because, of course, they're buying the top and they're selling the bottom. And yes, it's that behavioral element. It's probably why Buffett says that an extra 20 IQ points over some threshold doesn't really help you be a better investor. It's more about temperament and moving against the crowd.
One other really interesting idea, that when we look at where we are today, I think a person needs about 1% of Bitcoin to preserve their net worth today, portfolio size wise. Let's say Bitcoin goes to 500,000 by late 25. Okay, just as a number, you would probably need about 10% of your portfolio to preserve your net worth at that point. Okay, and think back to what I just said, which is that's going to be the exact moment where if a person's trying to do a spot buy of 10% of their net worth into Bitcoin, which is a massive position size in finance, right? If you're taking on a position of anything, they need to have potentially the longest. At that point, you know what, Andy? I think halfway through 2025 into late 2025, I just don't even want to go on podcasts or even talk about this anymore, because the decision is going to be so insanely hard as to what the hell you do. I don't have advice for that person. My advice is that you need to own 1% in your portfolio today. That's my advice.
That's it. Timestamp that today.
Yeah.
And then when everyone's asking you about it, when we're much higher in price into the cycle, then it just becomes more. It's you're toggling between buy 1%, get off 0 versus work very hard and educate yourself and learn.
Yes.
Learning is key.
And that ties back to I guess the original question there of what is the right position size for everybody, and obviously it varies. But Two Oceans Trust put out a really interesting analysis that showed that, obviously we know the Sharpe ratio is for Bitcoin is the most attractive thing out there. But if you have a 2% allocation in your portfolio, that actually decreases overall portfolio volatility. So not only do you get like the most attractive returns, you're actually decreasing volatility if you have 2%. So, 1%, 2%, something like that is, I think, in my opinion, necessary at this point. And so far, Andy has not had this question turned on him. So I want to know, what does Andy say to his clients, or when this comes up, how do you address it?
Yeah, happy to do that. So pretty much everyone for whom I invest assets gets at what is at this point a few percent position. And that's a surprising outcome. Some people are surprised by that outcome. In other words, some people think, oh, I'm a really aggressive high-risk investor, so I should have more Bitcoin. And my retort to that argument is, well, if you're the opposite of that, if you're a, quote, low-risk investor, which implies that you're going to have more bills and bonds in the portfolio, you're going to have more of Preston's favorite investment asset, the U.S. Treasury. Well, what does that mean? It means you're more exposed to the debasement of the currency.
Yeah.
And so if the currency gets debased at a more rapid rate, well, gee, you better have some inflation and debasement-proof assets in your portfolio. And the hardest asset that I've yet found in my career managing and investing people's money is Bitcoin. It's taking share from gold in our portfolios. I have to say I'm short to medium term, sort of bullish gold. The thing I tell people is I sort of expect comparable dollar accretion of value to gold and Bitcoin. So like if gold doubles and adds 10 trillion in market cap in the next number of years, and Bitcoin adds 10 trillion of market cap, right, which is a multiple on its current price, that seems like a pretty reasonable outcome for me in this decade. Who knows what'll happen, but I think that's a reasonably likely scenario. So that's what happens for my clients.
One of the most interesting numbers I think you can look at is if you take any 4-year holding period after the last 10 years, and you construct a portfolio of 98% S&P 500 SPY ETF, 2% Bitcoin, you will double the performance of the S&P 500.
Amazing. That's an amazing thing. And Jesse and I have had conversations in the past about, what's an uninspiring scenario for investment for the next decade. Or half a decade. I could imagine that bonds do very poorly, that equities, barely maintain their purchasing power, and Bitcoin far outperforms the pack with a, let's say, 20 to 30%, gross annualized return, which is 10 to 20% net of inflation. Now, I think it'll do better than that, but even if it does that, and it still far outpaces the performance of most or all other assets, you got to have it in your portfolio.
Yes.
And you don't have to have 10% in your portfolio, but you probably should have more than 1% in most cases. And I think for many people, that's the right answer as far as the portfolio is concerned.
Yes.
So, what do you think about this Bitcoin discussion? Do you agree or disagree with Preston, Andy, and Jesse? Also, what do you think is the optimal allocation to Bitcoin? Let us know in the comments below. Don't forget to give this video a like and subscribe to the channel. Until next time, keep learning and keep stacking.